The Financial Times reporting new Chinese energy efficiency rules that could prevent local companies from buying some of NVIDIA's best-selling chips. Joining us now with more on NVIDIA and some other mega-cap tech names. As the first quarter comes to an end, Ray Wang, Constellation Research founder and chairman. What does that leave as an alternative, one of the deep-seek, low-power ways to get AI? It doesn't sound nice to tell companies they can't buy NVIDIA. We don't want to buy NVIDIA chips anyway.
Well, here's the deal. Actually, these NVIDIA chips are being sold through intermediaries in Singapore and in the Middle East. So they're still getting to the chips. They're just not getting as many of them. And so that's one of the challenges that's going on there. So
what is China really doing here? They're worried about using too much power? That's not what it is it?
Well, they're not worried about using too much power. They actually have a very low power rate. They're actually operating at 2 cents per kilowatt hour. We're operating at 8 cents kilowatt hour. They have amazing energy advantage over us at the moment.
Why? Because they use coal?
They're using coal-fired, nuclear. They've got geo, and they also have hydro, right? So they're damming up. They're doing hydroelectric better than anyone else.
So the importance of NVIDIA to the overall market, I don't think you can overstate that. So has NVIDIA made a bottom, and is it ready to reassert leadership and take the market higher, in your view?
I think the overall market has been waiting for tariffs, and that's been the overhang. But once we get out of it, I would say it is at a bottom. If you look at the PE ratios, it's at 40 versus 36, which is its all-time low. And I think it's going to go back up. Part of the reason here is because, they're making 6 of the Mag 7 are paying for NVIDIA to be able to get into AI. You're also seeing it on the other end in terms of Blackwell chips versus what they were able to do with Hopper chips. They sold 3.6 million Hopper chips, Blackwell chips over 1.3 million Hopper chips. So they're definitely getting traction, especially where they're going on the chip side. Plus, they've built moats everywhere. You're seeing moats around CUDA, which is the software layer. You're seeing moats around how they do connectivity. And they're also got moats in terms of where the chip design is. So they've got a product roadmap for the next 10 years.
What can go, can anything stop this train, in your view, for NVIDIA or AI in general?
Yeah, a couple things can be as we get more actually efficient with inference versus training. That's going to be one. And TPUs. If you look at a company like Google, they're using TPUs to do all their internal stuff. So these tensor processing units, these TPU chips.
Did you think I knew what that was? Did you know tensor processing unit? He just calls them TPUs. I know what a CPU is, but
we go from CPUs to GPUs to TPUs, and what's happening is Google uses tensor chips, and those are a lot more efficient than GPUs, especially for solving a lot of the problems they're doing. So that's what makes Google interesting, because they're vertically integrated from chip all the way to AI.
Who's the closest competitor? Who's doing something that's the closest, the most likely to be able to catch up NVIDIA at some point? And if so, how far down the road would that be?
The sad news is it's 3 to 5 years out. If you say AMD is close, they're not even close. Right? But the question is, will you need these kind of high horsepower chips in the future? And the short answer is hopefully not as much.
It just seems hard to think that we won't need more computing power, no matter what happens. It's just always been a demand that's continued to go up.
We're going to need more and more compute, especially when we're at the edges, right? AI is going to move to the edges. AI is going to move to your devices. This is why it's interesting when you look at a company like Apple. AI is going to happen on your handset. So
let's say no company in China can, they can't get intermediaries to sell them NVIDIA chips. What would happen?
They're just going to get more efficient at using chips that are not going to be NVIDIA GPUs. You look at Huawei. Huawei is about to create a whole bunch of chipsets that are going to be trying to compete with NVIDIA. But still, it's the fab manufacturing. It's the whole piece. They don't have all that yet. So we're still about 5 years ahead of China right now in terms of AI chips.
Well, it'd be good if we could stay 5 years ahead.
I don't know if we're going to stay 5 years ahead. That's really the challenge, because we've got leakage through Singapore and the Middle East at the moment, where they're getting the chips and trying to reverse engineer.
So they will do that, won't they?
Well, if you put demands on, right, innovation is really coming from necessity is the mother of innovation, right? And that's really what's happening.
So they'll reverse engineer the chips. So they won't be behind for long.
Or they'll get really efficient at calculations, like DeepSeek. So when we thought about DeepSeek, right, it wasn't the Sputnik moment. It was the Napster moment. They took our code, stole it, and gave it away for free, right? And they're going to continue to do that. But what it did was create this open source piece that everyone in China is starting to go open source with it. So Baidu went open source. You saw Tencent went open source. So everyone's going down that route.
Over the past few years, Nvidia has astounded investors by rising with seemingly endless momentum to achieve record highs. Prior to the company's stock split, which was an attempt to cut the price per share, the stock even surged above $1,000 last year. All of this is a result of Nvidia's dominance in artificial intelligence, AI, one of the most closely monitored markets today. Analysts predict that this market will grow rapidly over the next 10 years, and the current events lend credence to this prediction. Tech companies are spending billions of dollars on AI initiatives, and many are already beginning to see results. For instance, Amazon's cloud computing division reported a $115 billion revenue run rate last year as a result of customers choosing its AI services and products. Nvidia's profits have increased as a result of all of this. Up until recently, the share price followed, as worries about the overall state of the economy trumped hopes for Nvidia's financial performance and prospects. The stock of Nvidia actually accomplished something last week that it hasn't done in almost 3 years. Let's examine this action and speculate about what the future holds. You may be familiar with technical analysis, regardless of how long you have been investing in stocks. It entails analyzing past market data to forecast potential future movements of stocks. Because it may advise you to purchase or sell at a particular time to perhaps profit, it is frequently linked to short-term investment. Well, Nvidia's stock just made a significant jump in the realm of technical analysis. Last week, it formed a death cross when its 50-day moving average, a measure of the average price trend over a specified time period, passed below its 200-day moving average. Furthermore, a death cross indicates that negative momentum is increasing and may develop into a long-term pattern. Let's now examine the performance of Nvidia's stock after its most recent death cross, which occurred in April 2022. Given that Nvidia's stock fell almost 45% from that time onwards for the remainder of the year, the metric was a reliable indicator of what was to happen. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Day options, they don't believe me. Well, no, they're skeptical of my view, but I don't care because I know that my view is right. That they can push anything down. It's instant rapid fire. It is almost as if when they came up with the Gatling gun in the Civil War, where everyone's doing single musket, and then the Gatling gun, or the first day, Verdun. Verdun.
What about Verdun?
Well, I mean, look, when they realized that there was not going to be the war would not be over in 6 weeks.
The meat grinder of Verdun?
Well, because machine guns were not, until you had a tank, machine guns killed everybody. These guys are machine guns. And there's no defense. NVIDIA has no defense against the machine.
So you think the shares are vulnerable?
Absolutely. Absolutely, because they want it down. Now you'd say, well, that's a grand conspiracy. No, I actually talked with one of the firms. And, it's every man for himself. And NVIDIA is vulnerable to that nonsense versus real buyers who could come in and say, I can't believe I got this bargain because they're trying to break it with a death cross. And that's the 50-day going under the 200-day.
Oh, is that what that is?
Yeah, it's not the cross of gold, William Jennings Bryan.
You know how closely I follow all these technical indicators.
Yeah. Okay.
The head, the shoulders, the neck.
Well, no, it's a cup and handle, David.
Knees and toes, knees and toes.
David doesn't
I hate to see the knees and toes.
Well, David, I'm saying, here's what I'm doing. I'm presenting a case where ignorant people, they'll love that. I just throw that as a bomb. Ignorant people are doing things to the stock that no one ever believed could happen because of when the SEC, even the old SEC, allowed a 2x inverse. That presents a tremendous amount of power against the stock. And they bless these zero-day options. And that is just a nightmare for a stock. Because if you come in, like they came in this morning, 3:30 they were doing it. 3:30. I mean, what the hell, 3:30? I have to get up to see these clowns? 3:30, they're using a Laws rocket. I don't know what they're doing. They're like,
all right. So I know you're very focused on the after hours trading, before market trading, but over time this will effectively reflect the true value.
Yes,
right?
but I'm saying short term, it's a voting machine. Longer, no, you know what I mean. I'm saying that that this stock is vulnerable to what they want. And is it being manipulated? No, the SEC blessed these things. I just want people to know that the reason why it went down this morning was that you take the Joe Tsai, and then they were coming in, they were using heat-seeking missiles, they were using Laws rockets, they were doing everything they can, TOW. And
short seller's paradise.
Rob Sechan bought more Nvidia. Rob Sechan joins us on the phone now to tell us exactly why now.
Well, Scott, nice to be with everybody. Hi guys. Last week on the show, we talked about being in an athletic stance. And on Friday, that's exactly what we did. Corrections like these are historically great buying opportunities for long-term investors because forward returns skew positive. And you have to be ready to capitalize on that. Along these lines, we use the weakness that we saw to increase our exposure to our highest conviction, current highest conviction, Mag 7 names. Now, we've been overweight Meta for a long time, underweight Amazon and Nvidia. And we just think those two names offer an attractive combination of relative valuations, dominance, and durable long-term growth. On Nvidia specifically, obviously Bellware AI, incredible edge in advanced AI chips, years ahead of competitors. Next-gen Blackwell is showing healthy momentum, and this is despite concerns about competition, export controls, slowing CapEx at the hyperscalers. And you have a company that is going to track double their revenues in the next 2 years and produce a remarkable $100 billion in free cash flow. And as Jim just said, it trades at 25 times 25 EPS, 20 times 26. So on Friday, we entered the name. And we think it's a good buy. We're still not market weight, but we continue to increase as the market presents opportunity.
In November 2018, Nvidia made another such move, and over the next 9 months, its stock fell by about 40%. Does this imply that Nvidia will undoubtedly experience a protracted losing streak, and that you should avoid buying the stock? Not always. It's crucial to keep in mind that while technical analysis frequently finds success in identifying short-term trends, it ignores fundamentals, such as a strong track record of earnings or encouraging news that the company may announce at any time. Because they can purchase and sell in a few hours or days, day traders find these patterns helpful. However, there are two main reasons why long-term investors should not let a technical trend to influence their choices. First, as previously stated, technical analysis ignores a company's actual value as determined by its fundamentals. In essence, it shows you when you might record a gain by buying or selling in the near future. However, if you want to perhaps win even more, you should bet on a high-quality stock for several years so that you can profit as the business expands and changes in its industry. Second, opinions on a certain stock, in this case Nvidia, can change suddenly. The stock may rise at any time if a significant external factor that is affecting Nvidia changes. For instance, Nvidia's stock could rise if the Trump administration agrees with trading partners or lowers the most recent import duties. Therefore, rather than trying to wait for the lowest level, it is better for the long-term investor to purchase a stock when the valuation is appropriate. Timing the market is extremely challenging, and if you do it, you risk missing out on opportunities and spending excessive amounts of time in front of your computer screen. It's crucial to remember that Nvidia surged higher following previous death cross times, rising by almost 85% in the 18 months after the 2022 occurrence, and by over 140% in the 2 years after the 2018 one. Accordingly, it is advisable to put away worries about possible short-term trends and concentrate on a company's possibilities for the upcoming years. In this instance, Nvidia gives us several reasons to be excited about the future. The company's emphasis on innovation should continue to make it the leader in AI chips. Not only is Nvidia producing exceptional revenue, but it is also doing so at a high degree of profitability, with a quarterly gross margin of over 70%. In light of these factors, Nvidia's stock appears to be fairly priced now, trading at 25 times projected earnings projections, down from 50 earlier this year. Therefore, astute investors may take advantage of this to purchase Nvidia stock at a discount, hang on to it, and possibly profit in the long run, even though history indicates that the company's downward trend may continue. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Alibaba Chairman Joe Tsai warning of potential bubble forming in data center construction. Those comments coming against the backdrop, of course, of a massive push from big tech for AI infrastructure. For more, we're bringing in now Doug Clinton, founder and CEO of Intelligent Alpha. Doug, always good to see you, my friend, on the show. Let's get to these comments, Doug, from Mr. Joe Tsai, warning of this possible bubble in the AI data center build out. He says here, Doug, I start to see the beginning of some kind of bubble. Tsai said, I start to get worried when people are building data centers on spec. You read those comments, Doug. You saw them. They got a lot of press and headlines, and for good reason. What did you make of them?
I'll tell you, Josh, I feel like Joe Tsai is sort of saying the quiet part out loud. And everybody that is tracking AI closely, I think including the hyperscalers who are investing tens of billions of dollars a year right now in this AI CapEx build, I think everybody sort of knows that things are heated, maybe a little frothy, and maybe we are on the verge of the bubble. And so it's funny, his comments are getting a lot of attention, but in my opinion, look, we've been saying that we think there's this 2 to 4 year window that we're in right now where we will have an AI bull market. It will get frothier and frothier over time. I think it will result in a bubble similar to the dot-com era. That doesn't mean that we are in a full-blown bubble right now. I don't think that's what Tsai is saying either. But I do think people are just going to be talking more and more about this concept as the bubble heats up.
So if you're an investor, and you are, looking at this opportunity, and you're seeing it play out eventually as maybe an overextension on the part of some players, do you even worry about that right now? Or do you just sort of go all in and worry about that on maybe closer to the peak of the cycle?
I think you always have to worry about it, Julie. And throughout these cycles, if you go back to kind of the dot-com era, you do have periods of sort of undulation where at times locally, right, at that point in time, the market gets a little overheated, sentiment gets a little bit too hot. And then you have periods of time where I think the sentiment is actually quite reserved. And if you look at the beginning of the year to now, I think at the beginning of the year, sort of January to February, AI, the trade got really heated. We saw a lot of these energy plays getting bids, to kind of fuel some of these data centers. So everything that touched AI was just working. And then we had the DeepSeek moment. And for the last 4, 5, 6 weeks, I think the AI trade has just been totally broken. And now I actually think we've gone into a period where some of the fundamentals and some of the investments that are being put into this space, in some ways, I think aren't even being reflected now in some of the bigger AI names. And I think it's a good time if you have a 2 to 4 year horizon, like we're kind of talking about with this potential bubble. I think it's a good time to add AI exposure where the fundamentals right now are actually perhaps discounted to some extent by the market.
And so if you're looking to add AI exposure, Doug, what as a tech investor yourself, what interests you?
I can tell you at Intelligent Alpha, we use AI to do our stock picking in our portfolio. And so for our Livermore Fund, LIVR, the main AI exposure we have is still in the chip space. So Nvidia, TSM, and Micron are the 3 major AI holdings that we have in that fund. And then on the software side, I think there's opportunities in Atlassian, so Team, TEAM, and also HubSpot as companies that are really starting to build AI products or AI capabilities into their products. And hopefully we start to see some of that translate into accelerating revenue sort of in the back half of this year.
So, Doug, I guess then I would go back to my question for these specific names, particularly for the chips. If we are building towards a bubble and then an eventual rationalization within this space, at what point do you pull the chute, right? At what point do how much more growth do these companies have before you hit that point?
It's an uncomfortable answer, but it's the most honest one, is that it's partly about the fundamental realities and it's partly about vibes. That's kind of the hot word, I think, right now in the investment world, in the venture capital side, where we also play. But I think you need to sort of monitor both. And what I would say, again, going back to what is the current state of the environment right now, I think the AI fundamentals are still strong. We're still seeing these hyperscalers investing huge amounts of money that's benefiting Nvidia. I think it will benefit, Broadcom. By extension, Taiwan Semi plays in all of these spaces. And so these companies are still benefiting. That's the fundamental reality we're in. From a vibe standpoint, the market just doesn't want anything to do with AI right now. The excitement around the trade, I think, has totally reversed. If you expand out, though, into that 2 to 4 year window, sort of how do you know when it's over? I always think one of the greatest sort of heuristics I've ever heard for understanding when a bubble is over was from a book called The Go-Go Years by John Brooks. And in it, he retells some of the bubbly behavior in the 60s and 70s. And the adage they had was, look, like bubbles don't end until basically the new issues market is completely wide open. The worst companies in the world can go public. We absolutely have not seen that yet in this current tech cycle. We haven't even seen the good companies come out yet. And so I think that's one reason to believe there's still probably a long way to go in this cycle.
Okay, far away.
When CEO Jensen Huang gave his keynote address at this year's event last week, he shared some noteworthy insights about the direction AI is taking and news about NVIDIA's role in it. The NVIDIA GPU Technology Conference, GTC, has grown in importance for the artificial intelligence developer community in recent years. Demand has been high for NVIDIA's newest and most potent graphics processing units, GPU, which are based on the company's most recent Blackwell architecture. Almost all platforms and developers are searching for methods to use AI, and NVIDIA offers the best technologies to help with those efforts. Revenue increased 78% year over year in the fourth quarter of fiscal 2025, which concluded on January 26th. Huang pointed out that in the first quarter of Blackwell's release, NVIDIA had already registered billions of dollars in sales. Big IT companies that can afford to construct enormous AI data centers want the best for themselves and don't want to lag behind their competitors. However, NVIDIA is already working on the Rubin architecture, its upcoming generation of potent chips. These will be 14 times more powerful than Blackwell, and it goes without saying that the company creating and maintaining the software will want the most potent processors available as AI's requirements change and grow. Late next year is when Rubin is anticipated to launch. One of the upcoming developments in the field of artificial intelligence is agentic AI. After being given basic instructions, these specialized tools will be able to function as agents on a user's behalf, handling things like drafting emails or scheduling trips on their own. Since such systems will have to handle a lot more stages as a result, according to Huang, agentic AI will require 100 times as much power as existing AI technologies. According to him, people who think that the introduction of DeepSeek, a tool that was reportedly much less expensive to develop than earlier large language models, will hurt NVIDIA's sales are mistaken because the sheer power requirements of agentic AI will increase demand for NVIDIA-style chips. Even if several competitors offer comparable products, NVIDIA leads the industry in both manufacturing and sales of state-of-the-art GPUs and AI accelerators, and it is continuously enhancing its processors to maintain its lead. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
100, basically perfectly even. Kevin Green, do we pick a direction or are we going to end this day perfectly onch?
It looks like, right now we're in a compression type of period. So could we end pretty much flat on the session? That could be the case. We're actually at the lower end of these levels that we kind of look at on a day-by-day basis. That 5760 area is kind of that lower area of support that I'm focusing on going into the close. We've seen some buyers kind of step in there. And if you go below that strike, the premiums are not that expensive to kind of suggest that maybe there's a lot of buying activity taking place here over the next 30 minutes. It does appear that we might compress for the most part. But if we do move to the upside, 5780 is going to be the top side of that range. We were looking at 5800 potentially earlier this morning, but those premiums are really cheap. I think the 5800s are going for about 5 cents right now. Really not indicative of, the market really trying to push there. Now, anything can happen, obviously, but we've been in this nice little, descending channel for now, respecting the upper and lower bounds of that channel. And for the most part, I think this is actually a pretty decent day. I mean, if you kind of look at it.
You pretty much called it this morning. You said that it was going to be likely kind of a compression. Why was that? Were the strangles really cheap or something?
No, so when we kind of look at the levels earlier this morning, what you saw is like there's activity at the wings, which is what we really kind of focus on. And we can kind of get into the nitty gritty here. if you kind of look at the positioning to start the day or to start the session here, what I'm actually really trying to focus on is just looking at the out of the money calls that are seeing a lot of early activity, especially even at the end of the day yesterday going into this morning. Okay. And then the out of the money puts. Those wings, the activity was definitely there, but when you're kind of comparing the premiums compared to like what the VIX is doing or what volatility is kind of pricing in, it looked relatively cheap. And so if that's going to be the case, it just kind of means that there might be a little bit more compression. The premiums really kind of tell you the activity. If we were looking at this market and saying the 5780s right now are going for $3, the 5780 calls were going for $3 or $4 right now, given the fact that we're 12 points away, 30 minutes left to go in the close, that kind of gives you a sense that, hey, there's still some market makers that think that this could be achievable. And that's just not what we're seeing right now. So that's the reason why it looked like a little bit of compression. VVIX, once again, we kind of talked about this yesterday, came down at a pretty decent level to the downside. The July lows, you were expecting a little bit of a re-rating there, but VIX hasn't really done anything. And so we were implying around a 1% move today. We didn't get a 1% move, I don't believe, even close to a 1% move. So this was a premium seller's market. If you were selling call spreads to the upside, or if you were selling put spreads to the downside, you pretty much had a pretty decent day. And that's the action that we're going to see over the next couple of trading sessions here. I would expect a little bit more compression to continue. Last thing I will say, though, here, Oliver.
It does kind of seem like the pain trade is just my simple view is that everybody was kind of probably betting on a direction. If you were bullish, you got so jacked up yesterday, you were riding the wave. If you're bearish, you're saying, no way, this is a fake out, and then place where you get hurt the most, the J.J. Keenan theory, right in the middle.
Yeah. But we're holding up with consumer confidence numbers that we're holding.
Yeah, I agree.
That's actually very telling.
That's impressive to me.
Yeah, so that's very telling. And then I'm not just seeing these kind of risk reversal trades or individuals that are selling downside puts and buying upside calls and doing it on a cheap basis. It's fairly risky if you don't have the money in your account to be able to support the whole position. But that was actually a lot of the action we were seeing yesterday. Let's look at a longer time frame, though. Okay. If we're looking at the daily chart, we did hit the upper end of this channel line that we've been focusing on. So we have been kind of pressed between this I call it the primary channel. It was the first channel that developed in this downtrend. That primary channel, the upper end of resistance, we pretty much pinned at that to the upside here this morning. And then to the downside, we're pretty much hitting the 200-day moving average here. Now, the candle is kind of bearish. You can see it looks like a little bit of a stalling out pattern, or maybe potentially a little bit of a reversal. Depends on if we get a downside tail going into the close here. But once again, holding up with some really lackluster data, I think is actually a pretty decent sign.
Also, too, because of all the dealer pressure up there, I guess we should expect maybe the rate of change to slow a little bit as we kind of eat through that area.
Well, it's what actually rolled off last week. Like, if you kind of notice, after last week on Friday, what happened yesterday? Yesterday, we had this kind of re-rating in the market, right? And we ramped up. There, a lot of this, the walls that we had expiring are no longer there. We had a new repositioning. And so you can see it with this range that we have, 5,700, 5,800. That's kind of indicative of that. You're going to start seeing over the next couple of days more layering on to the upside as well as the downside. And we'll have a little bit more of a defined range. But once you alleviate yourself from all of that pressure, once again, $4.4 trillion worth of premium, you reset the market. And that reset is going to kind of, we reset at whatever level that we are currently at, if that kind of makes sense. So if we're in a negative gamma situation before, which we were, a lot of that premium rolled off. Now we are not. So now we can actually have compressed markets in the fashion that we are right now. And generally, markets are, for the most part, positioned to the upside here. You would hope for a break above 5,800 tomorrow. I wouldn't want to stay in this range for too much longer here, because if we break below the 200-day moving average, come back and kind of get very close to 5,700, say 5,720 or so, I think the bears would get a little bit more confident that, one, they could fill that gap that we actually made yesterday, and two, this is once again a counter trend rally that we can kind of fade into over the next couple of sessions.
All right, so we hope that